What's up, guys? Welcome back to the channel. Today we're going to talk about becoming funded the right way, and I'm going to give you 5 crucial steps that you should follow before you apply to a funding account, because too many people fail because they don't prepare well and all sorts of reasons. And today I really want to give you the guidelines to follow before you apply to make sure that you don't fail just because you didn't prepare well. So let's get started. Take some notes because I'm going to give you a lot of information, and then let's dive into it. Rule number 1 is edge. Have at least one profitable trading strategy, and you need to know that for sure. So for example, here below you can see the equity curve of my strategy for a little bit over 10 years in 22 markets. This is one profitable trading strategy. And yes, there are bad periods. And yes, I'm having a bad period right now for quite a long time. The point is, I know this strategy has been working for over a decade in multiple markets. And that's what you want to have for yourself. Clear evidence that what you are wanting to trade in the prop firm has been profitable for many years, is very robust, is not curve fitted, and you need to know your worst case scenario. I will dive deeper into that later on, but knowing your worst case scenario or your worst drawdown will help you to manage risk, make a risk plan, and therefore minimize the odds of you losing the funded account, which is what most people do. So they pass because they got lucky. And then when they pass the challenge, they're all, celebrating and very happy. And then they got the first month of trading. They lose the account, never got a payout. And now they lost money and they are frustrated. That's what you want to prevent. And you can prevent if you know your edge, if you have at least one profitable strategy, that will really help you with that. Then we get to rule number 2, which is you need to have been able to trade that strategy with real money for multiple months without making mistakes. So we got the profitable strategy and we were able to trade it with real money without making mistakes. That's really important. So no FOMO, no missing trades during that period, no deviation from the plan. If you can do this, consistently trade your own money without making mistakes, that's really important, because when you're trading prop, there will be some pressure. You want to pass the challenge, so you will be putting some pressure on yourself. And if you haven't fixed your FOMO or your emotional issues, they will only be amplified because there's more money on the line, more opportunities, and therefore you will amplify the underlying issues if you haven't solved them. So if you notice on your own account that you do have these emotional issues, don't apply for funding. Fix them first, because otherwise you will probably lose the evaluation and you will be more frustrated and you will have amplified your problems. So fix that first. The next thing becomes picking the right firm. And so many people just pick a shit firm because their marketing is great or whatever it is. And then they get funded and, I'm not getting my payout, or it's delayed by 3 months. You don't want that, especially if you want to rely on a prop firm income. You don't want to be trading with a firm that really is not reputable. So are you a swing trader? Pick a firm that fits with swing trading. So if you have 10, 15 trades in a month, it will be very hard to pass a prop firm challenge that allows you 30 days of trading, because essentially you need to be really lucky that you're having a good period during the evaluation. So you passing the challenge will not depend on skill, but mostly on luck. So you want to pick a firm that allows you more time to pass the challenge. Picking the right firm increases the likelihood of you passing a challenge, and most people just don't do that. They don't do the research. They don't put in the time to research the firm that fits with them, and that's really important. Look for good reputation. Look for good support. Ask them questions. When I look for a prop firm, I ask them a question, do you know the average slippage? What's the average spreads during rollover? Those type of things. And I want to see if they can respond well, and if, what they give me, does that suit my trading? So just test their support, like ask them some questions. And if it takes them too long to answer and they give you a bad answer, probably not the best firm. So focus on that. Pick the right firm that fits with your trading style and has a good reputation and has good trading rules and conditions. And that brings me to rule number 4 is understand all their rules. Too many people fail because they break rules they didn't know about, and they didn't know about them because they didn't put in the time to investigate. So read their reviews. What do people complain about? Is it a certain rule? Note that rule down and make sure that you follow it. Read the FAQ. What are the most asked questions? You know, take a look at those as well. Read the rules. Ask questions to their support when you're not sure about it. So many people fail because they don't do this. They just want to trade. They see, oh, I can get 100K from them. Let's apply. Let's get started. Never taking a look at the rules. Oh, I breached my daily drawdown. Or, oh, shit, I didn't know the daily drawdown was a trailing drawdown. Or, oh, I didn't know I couldn't hold my trades during news. Whatever the reason is, it's all excuses for not being competent, not putting in the time. I know I should be working out, but you know, McDonald's was just around the corner, so I went there. All excuses. You went to McDonald's, you didn't go to the gym, that's your fault. Same here. You didn't read the rules, you were blindsided by the opportunities, you couldn't, you know, contain yourself, be focused on what you should be doing. It's all your fault. And as soon as you realize that, and the sooner you realize that, the better. You need to take responsibility for that. So if you fail because you didn't read a rule or you missed something, it's your fault, and it's not the prop firm's fault, it's your fault. So don't complain, basically, and prepare. Like, be competent, step up your game and understand all the rules. Very important. Then when you did that, create a risk plan. And you want to create 2. Create a risk plan for the evaluation phase and for the funded phase. So below on this picture, you can see an example. This is like very basic. You want to go in way more details, but this is very basic. Know the max drawdown, know the max daily drawdown, the target, how much you're going to risk per trade, how much R you need to make to pass, etc., etc., etc. You want to make a complete plan for the evaluation and for the funding. Why? Because the rules tend to differ a bit between the funding, between the evaluation phase and the funding phase. So you need to have a different approach there. And also, if you pick an evaluation that has a certain time period in which you need to succeed, you tend to want to risk a little bit more and rely a little bit more on luck to pass those challenges, because you have to. Like, making, you know, 10% in a month is a ridiculous amount of returns. So you need to up your risk to get there. You need to trade in a way that has a higher risk of failing to pass the challenge. But when you're then funded, you can scale down your risk and make sure that you are, you know, more consistent, more conservative, so to make sure that you keep the account and not blow it like everyone does. So if you take a look at this example, when you're funded, you can risk, let's say you risk 0.33%. That means you can have a 36R drawdown before blowing up. Now, obviously, you want to calculate this based on your maximum drawdown for the strategy. So let's say you backtested and your maximum drawdown was 20R. I would say add 10R to it, so add half to it, because it's a backtest, it's not real life, etc. Goes way more into that, but use that as a rule of thumb. So that makes it 30R maximum drawdown. Then you take a look at, okay, what is the maximum amount of drawdown I am able to, you know, get away with? That's 12%. Then you make sure that the 30R is around that 12%. So in this case, it's 36R drawdown that you can get. You want to be, again, a bit more conservative. You can have slippage, miss winning trades, all these things. So maybe if your maximum drawdown in your backtest was 30R, make it 33R, 34R, and then you calculate your risk based on that. Yes, it might be conservative, but this makes sure that you don't blow the account. And if you want to be a bit more aggressive and go for 25R and then risk based on that as your maximum drawdown, it's also fine. All I'm saying is that calculate and make a plan beforehand. So prepare, basically. Prepare for the evaluation. Prepare for the funding phase. And by doing that, you can beat most people that just apply and fail. So let's take a look at the next thing. Now, if you have questions about this video or about getting funded, you can ask them below, or you can go to my Instagram and send me a message. A lot of people that watch this channel actually sent me a message. So thank you for that. I really like to connect with you guys. Even if you just want to connect, chat trading, go to my Instagram, send me a message. I'm here to talk. I do enjoy talking to you guys. If you haven't watched the free training yet, link below the video, like, subscribe, and then I see you next week. Thank you for watching.